Welcome. My name is Sasha Moore, and we're here today at Aquamore's Product Refresh and Market Update live panel event. The aim of this session is to provide insider insights on what's expected this financial year in private lending, a bit of an overview of Aquamore's current portfolio, including their niches, the changes in Aquamore's product suite, including products, loan increases, and a few other bits and pieces, where the opportunities are in private lending this financial year, and how the sector is evolving and fits into the lending landscape strategically. So today we're going to hear from Matthew Porch, who is the head of distribution at Aquamore. Welcome, Matt.
Hi, Sasha.
And we also have with us Joe Williams, who's Aquamore's relationship manager for Western Australia, Northern Territory and South Australia. Welcome, Joe.
Morning, everyone.
So please feel free to feed in any questions you have via the Q&A function throughout the webinar. We love questions and we want to make this as engaging as possible. So please feel free to shoot through any questions, whether they're technical, market or other. So let's get cracking. So Joe, I'm going to start with you. I'm interested in learning a little bit more about your background and how you've come into the role at Aquamore.
Sure. So I'm a career banker. I started out as a teller all the way back in 2006 as an 18-year-old uni student. Worked my way up through the retail space at ANZ before moving into SME banking and then finally commercial banking across a few different institutions. So Bankwest, BOQ and Westpac most recently. In my commercial banking career though, I've worked with clients from literally every industry imaginable. You name it, I've probably seen it. Same with business complexities. I've worked from small, like simple sole traders, all the way through to really large corporates. So again, nothing's really too complex. And then finally this year, made that jump over to the private lending space with Aquamore.
Okay, well, I imagine that is quite a different, moving into private lending is quite different from being in a more traditional banking sector. How is life in the private lending space by comparison?
Well, firstly, it's actually great to move into a new lending space and still actually be able to use all of the skills and knowledge that I've built up over the last 18 years of banking, but I'm just putting them to use in a totally different way. Working, like I said before, some of Australia's largest companies, I've spent years working through red tape, cumbersome processes, disengaged colleagues, but here at Aquamore, we're just smaller, simpler. It means we get things done quicker, we're more agile and adaptable to change as needed. In terms of the lending itself, though, one of the biggest changes for me is stripping away all the complexities of commercial lending. No more risk grading or massive credit papers or strict underwriting standards. It's more using this judgmental, does it make sense approach instead. Love it.
Yeah, that's awesome. And Matt, I know that you've come from sort of a more institutional background. What would your thoughts be from being in a more traditional space to the private lending space?
Yeah, I mean, to mirror what Joe said, my background was quite similar. I was corporate banker at ANZ for 7 years, and completely agree with what Joe said in regards to the red tape and the speculative applications that you end up having to look at. You're not really sure where the appetite lies. You're not sure what the credit manager is going to say. Ordinarily, the decisions are made by people you've never met before, which is hard. So yeah, everything that Joe said was absolutely accurate in respect of judgmental credit and being a small boutique firm that can make nimble and effective decisions.
Yeah, indeed. And I would echo those sentiments, even though I'm coming from a marketing perspective. Working in the private lending space versus the more traditional space, it's definitely much more complex, more multidimensional, more interesting, from my perspective. So I can see the appeal. So let's go on to just what you're seeing and what, Joe, I'll go back to you. So what type of solutions are you getting success with currently? And then Matt, I'll throw to you whether you feel that that's more state specific or whether that's more reflective of what's happening nationally. Joe?
Yeah, so firstly, it's our speed to market. We can get approvals done much quicker than banks. And I know that from firsthand experience. And it just means that we can help our clients who are facing those tight deadlines In my previous life, we can wait weeks, months for an approval. Doesn't really help the client that much, whereas we can move things a lot quicker here. In terms of the actual solutions, we're really working on simplicity. We have a few products that we'll still, talk about, no doc, lease doc, for example, but the product suite just allows for like a really simple application process. Example, the no doc policy. We literally just need the application form, customer ID, and a background of what's happening. No need for servicing exercise, just does it make sense, like I mentioned before. And that's where I was really talking about, holistic views of the client situation. How did we get there? How is this lending going to help them? For example, are we going to pay out the ATO arrears that they've built up as part of our overall funding and help them get into a better place in the future?
Yeah, definitely. And can I just start to just delve into that a little bit more? So what type of recent scenarios are you seeing, or is there a dominant requirement for funding, or equally, are you seeing any trends with specific industries?
I'm certainly seeing a lot more asset-rich, cash-poor clients at the moment. That's the inquiries that are coming through. Maybe it's a WA specific thing. Our property market's absolutely exploded over the last 12 months. So people have got a lot of equity. They're looking at future opportunities and they want to cash out. That's where things like our no doc product comes in perfect.
Okay, and how about nationally matched?
Yeah, I mean, it's no secret that cash flow is stretched, especially in the SME industry. That in itself leads to opportunities for the private lending space. It allows brokers to be a bit more flexible with their clients in respect of what's required. Interest cover ratio and debt service cover ratios are stretched in the major and second tier lenders who place a lot of spotlight on those figures crystallized at a certain point in time. So the opportunities in the private lending space to look at things a little differently and provide a short or a bridging term commercial solution are second to none at the moment. But yeah, what Joe said, there's a lot of equity in properties out there at the moment, and we are seeing a lot more people look to take advantage of that equity as things are a little tighter.
Thank you. Joel, go back to you. Can you just to round out that observation, provide a scenario of, something recently that's come across your desk?
Yeah, sure. So we recently just settled one. Again, it was a cash out for a future investment. The client wanted to do put money in towards a development, very complex business structure. There was trusts, entities all over the place, just from their industry, which is real estate. Lots of other third parties in there that didn't want to obviously get involved in this lending. So for us, we stripped away all of the servicing, did the no doc approach because it was nice and simple for the client, able to cash out on the equity they built up in the property here in Perth. And then happy to give them what they wanted. They had a bit of existing ATO arrears and some future coming up as they were about to submit the next year's tax return. So we cleaned that all up, made sure they had absolutely everything they needed and funded nice and simple for them.
Okay, great. Thank you. And Matt, what about from your end? What's a recent scenario that you've encountered more on the Eastern Seaboard?
We had a doctor who was a top surgeon, racked up a lot of ATO debt, which his explanation to us was that he's working 16, 17 hours a day, which is normal for a surgeon of his level. The ATO debt slipped through the cracks. Again, ordinarily not really an excuse that I would buy, but given the client's profession and reputation, that was a story that was very feasible. So unencumbered residential house, cashed out against that to pay off the ATO. And then 3 months later, this is not a historical transaction. This was about 6 months ago, but 3 months later, I think it was BOQ or one of the Medico sort of lenders knocked on the door and said, we'll take them off you straight away. The banks don't like ATO debt, but once that's cleaned up and they've got a little bit more of a track record, it doesn't have to be too long. This one was 3 months. Client was in and out, and he was very appreciative of the help. As I said, a lot of the major lenders, they say ATO debt and they run a mile. the ATO is more ruthless than ever. We had a good meeting with some of our stakeholders last week who are advising that you can't use COVID as an excuse anymore. Tax time has come around, and the ATO are auditing more people than ever. There's a little bit of a hole in the budget, according to what these people were saying, and they think they're going to get that back through aggressive tax acquisition. So.
Yeah, it's definitely reflective of the sentiment that that we've heard as well, that the ATO is cracking down at every level, and including super as well. So it is definitely the leeway that we previously had, or the grace period, is definitely done.
Yeah, and again, it's the banks treat ATO debt as poor character, which I think again is tarring everybody with the same brush. The ATO used to be very lenient. They used to act as an overdraft, and they used to make money on that. They used to charge 6-7%, which is cheaper than a bank overdraft rate. I think a lot of SME clients, it's not so much education, the word I'm looking for. It's more just a stark reminder of the reality of the times now, that the ATO is not your friend anymore. They're not there to lean on and borrow money from. And that's changed a lot. And whether the ATO has come out and said that publicly, I don't think they ever will. But their intent is very meaningful now. So.
No, indeed. Well, Matt, look, staying with you, let's do a quick recap on the lending landscape, starting with how the commercial finance sector is evolving.
Yeah, I mean, I was very grateful to speak with the Australian broker the other day, in conjunction with a couple of my peers, Jazz from Finsure and Dean from Equity One, and I think it was Corey from La Trobe, and we were all sort of in agreement that the commercial sort of landscape is transitioning away from the banks due to capital adequacy requirements and the amount of money that's required to hold these inverted commas riskier loans. That, I think, in its very essence, will drive a lot of commercial lending transactions through to the second tiers in the private lending space, especially as a lot of these lenders have sophisticated themselves a little more than they used to.
Yeah, indeed. So in terms of what that, like the logistics of that lending landscape, how are you seeing that divide occur?
I'm basically seeing the top four, the major four, or even the major five, if you want to put Macquarie in there, which I probably definitely would. You could probably sub Macquarie in, and maybe even sub ANZ out at this moment in time. But most people are going the major 4 or 5 for their home loan, and they're going elsewhere for everything, almost everything else. Car loans, Macquarie have stepped out of the car loan space. That'll open up the smaller lenders like Angle or Metro Finance and things like that, who, once they get more money on their balance sheet, who knows what sort of area they might delve into. Even Tyro, I know we're going sort of off topic here, but Tyro are the merchant providers who, every time you tap your card at a restaurant or a shop, Tyro have made some real inroads against the major lenders to take that business off them, and now they're offering overdrafts and unsecured finance to these trading businesses. So again, where will they be in 4 or 5 years? Will they start doing term loans and commercial property loans, for example? So it's very much evolving, the commercial lending space, and again, I think the major players in the space are starting to move away, and that will open up opportunities for lenders like ourselves and many of our other peers.
No, it's definitely change is a constant in our world, right?
Yeah, absolutely.
Joe, what have you noticed on the Western Seaboard?
Similar to what Matt said, there's a huge shift away from the traditional big banks, probably mirroring what I said earlier, that they haven't evolved, they don't move, they're not agile enough to keep up with the speed that people require. I think clients are finding it too hard to deal with. So there are a lot of smaller lenders out there that are willing to do it. And if they've got the technology to be able to approve things quickly and work out what a client's serviceability or don't in our case in some situations, it certainly means that we're finding more opportunity, more conversations, more quoting, more scenarios coming by our desk than we probably ever have before.
Okay, thank you. Well, Joe, staying with you, I'd like to move from the macro into the micro and just to have a recap of Aquamore's current portfolio. So can you give us a rundown of that?
Yeah, so in terms of what we can do from a product perspective, I've already mentioned it a few times, the no doc, it's probably our most popular product, simple application process, application form, ID, background of what's happening. Beyond that, we have the alt doc, which is verifying servicing from as simple as an accountant's declaration. So a single letter telling us how much the entity is earning, and we'll work it out from there. Nice and easy. Beyond that, we have lease doc, so commercial property under lease. Again, it's nice and simple. It's probably the recurring theme here. We consider looking at just the lease on the commercial property, and we only need a 1.1 times interest coverage, which is really low compared to some of our competitors and obviously the big banks as well. And then probably the last one I'll touch on there, SMSF, that's something that we've recently entered into. We're seeing a lot of inquiries there and it's starting to build and grow.
Okay, thank you. And Matt, I know we've talked quite extensively about the SMSF sector and how that's really booming at the moment. Can you maybe just to elaborate on that SMSF offering, where you're seeing demand?
We're seeing a lot of regional commercial properties coming to the fray, and I think that's not even just commercial. Actually, there's quite a lot of rural residential properties coming up in the SMSF space, and there's probably two reasons for that. Is first of all, the traditional providers don't really seem to understand the rural space as much. They're very postcode weighted, they're very geography minded. The second reason that we're seeing a lot of that is due to increasing yields. You're getting a much better yield in the country in the rural areas than you are in the cities, and I think that's reflective in what people are looking for when they go to retire. They're looking for that yield, and that's, I think, as I said, they're chasing yield, so that's what they want to do, is set and forget, find a place for a long-term lease. If that place is a bit more rural, it might be a petrol station, it might be this, it might be that. These people are looking for a better yield, and they're a bit braver in their investment decisions. So we are seeing a bit of that.
And in addition to that, I know we were sort of chatting offline about a lot of business owners acquiring the property or their premise, their business premise. Can you maybe also talk through that?
Yeah, absolutely. Again, if I was a small business owner, I would look to purchase my premises that I'm trading from and rent it to myself through super. It's tax effective, and it allows you to have a real tangible hold of your investment. You're operating out of it every day. You're looking after the place. You know what the foot traffic's like. You know what you could potentially rent it for. Why pay someone else's rent when you can fund your own retirement? That's sort of the way that I'd see it, and we are seeing a lot of clients in the same sort of bucket.
Interesting. I will go back to you, Joe. I've got a question that's come in from Jeff. Just a clarification, actually. Is the 1.1 ICR against actual rate or sensitized rate?
Actual rate only. Yep.
Okay, great. Thank you. Just to test your actual true product knowledge, just putting you on the spot. Okay, so Matt, back to you. I understand that there's been some updates to Aquamore's product portfolio. Can you please take us through those, but also with the explanation of why Aquamore's made these changes?
Yeah, I mean, it's we're now up at a $7.5 million debt size. That's been in play for quite some time. As I said, we are a solutions-based lender, and our maximum loan term at the moment is 3 years. We are seeking to try and have that increase, but in preparation for that, we are seeking to have more medium-term applications come through. If your client is in a position to service, and as I said, our servicing calculations are they're pretty lenient in comparison to the major lenders. If you have a client that's looking for a medium-term solution, we have incentivized that with a lower establishment fee. So if your client can come in and service the debt on a monthly basis, interest in advance, the loan approval fees are starting a lot less than if you're capitalizing and doing an asset-based lend. That's basically our commitment to the market, to try and build up a stickier loan book of very good clients, and we are happy to take a hit on loan approval fees for that. So, you know, if you've got a client with half decent cash flow and they're looking for a quick solution, run it past us, and you'll be very surprised at where the rates and the loan approval fees are sitting at the moment.
No, that's great. And what I will also mention to everyone post this webinar, we'll send an email with links to all of the different product summaries, niche sheet and so forth, as well as the team's details. So then you've got a complete house of all products and all points of contact. Matt, was there anything else you wanted to talk through from the new product lens?
No, as I said, it's the next step in our journey going forward. We've seen a lot of growth in what we've done so far, and to take that to the next level, as I said, we are looking to increase our maximum loan term from 3 up to, you know, anywhere up to 30 years. We are looking to become a longer term lender. But as I said, it's baby steps at the moment, and the way we try and get that done is to put a bit more medium term debt on the book. And as I said, we're willing to compensate your clients for coming in as a medium term client. So yeah, reach out with anything that you've got, and you, as I said, you'll be pleasantly surprised with how competitive the interest rates and loan approval fees are.
Great, thank you. So back to the macro, and particularly the question on everyone's lips is really where the opportunities are in private lending at the moment, and also how to spot a deal that would more fit into the private lending space. So Joe, let's start with you. What opportunities or growth sectors are you seeing at the moment?
Yeah, so I'll touch firstly back on SMSF because it's probably the one that's everyone's talking about. That's the uplift in inquiries we see there is absolutely huge. And probably my commentary on it is just around the client sentiment towards investments overall. Property market seems a lot safer. There seems to be a lot more growth rather than the traditional share market that's been super volatile as of lately. And then even just yesterday, reading about super funds, you know, that market or the asset base in Australia is now like $4 trillion, and SMSFs actually represent a quarter of that. So you think about $1 trillion worth of assets, which is mostly cash in super funds available, and they're looking and they're actively trying to see what they can invest in. That's where we can jump on board and certainly help that. One of the other growth sectors that I'll touch on was one of our newer products, was the rapid refinance. You know, clients that you've got on board that already have a loan, whether it's a private debt or whatever, if we can do a better deal, you know, our monthly repayments cheaper than theirs, we're happy to take it on board and, you know, get your client into a better position. And then finally, probably the biggest one is just how underrepresented private lending is here in WA. There's huge opportunities for brokers to find solutions with a legitimate, well-versed lender like Aquamore. A lot of other lenders just look at WA, they see a postcode starting with the number 6, and they go, not interested, don't want to look at it.
Interesting.
So Matt, that's probably a good segue. Can you just recap the postcode restriction policy for Aquamore?
Yeah, absolutely. So again, we look at all the transactions on a holistic basis. Yes, we are guided by our institutional bank who lends us the money, to put it simply, in regards to concentration and where we're weighted and where we might be overweight or underweight or whatever it is. But our policy is that we don't have any restrictions on where we can do business, to be honest. And what Joe said was very interesting. We feel that the Western Australian market is very underrepresented in regards to private lending and even non-bank lending, which is why we've made an investment to get Joe on, and we've been very grateful for being able to gather someone with his ability. And it's a testament to the way that we see the market and the way we see Australia. So I think, as I said, massive opportunities over there to do some proper business. And in terms of opportunity, it's something that the brokers really need to be aware of. As I said, well, as Joe said, they see a postcode beginning with a 6 and it gets written off straight away. We've seen some tremendous transactions, Western Australia, South Australia, couple in Northern Territory, maybe not as much, but WA and SA, absolutely.
Great, thank you. We might just go to 2 questions which have come through. The first one is regarding the lease stock product. We've got a question from Ruchia, what the LVR and rate is on the lease stock.
Yeah, look, it's all case by case. Interest rates start at 899, LVR anywhere up to 70% on a standard commercial property. But again, how long's a piece of string? It's all case by case dependent. So we would encourage any brokers with scenarios to reach out to your relationship manager for a quick and easy conversation around what can and can't be done.
Yeah, and I guess that sort of summarizes the approach. It's not a rigid one size fits all. It's let's flesh this out and see what is most aligned.
Yeah.
I have another question that's come through from Jeff. Does Aquamore have any clawback for a client refinance repayment within a 3-year loan term for a commercial facility?
No. So the commission structure is dependent on how much the broker wants to charge the client. That's done by way of mandate and dispersed using net settlement proceeds. So the money is effectively, it's not ours to claw back. So the answer to the quick answer would be no.
Okay, thank you. Great questions. Feel free to continue to pump them through. But Matt, staying with you, what can we expect this financial year in the private lending space?
Private lending space will continue to grow. Ties in with everything I said earlier. It's only going to go. It's only going to go in one direction. The brokers on the call, you will probably be aware of how many private lenders have popped up in the last 6 to 12 months. I think a lot of it might be determined by interest rates as well. It's a hot topic of conversation. I don't think that interest rates are going to go anywhere. They're certainly not going to go down. If they're going to go anywhere, it might be up, but I don't think they're going to move for quite some time. And I think clients out there need to make that realization. I think a lot of people are waiting for a reduction before they make a decision. If it was me, I'm going to say that they're not going to move. But as I said, the brokers on this call, they will have a lot of, they'll be getting a lot of calls from private lenders they might never have heard of. There are funds popping up all over the place. That just shows you where the market is going and what direction it's headed in. I would display caution with dealing with private lenders you've never dealt with or never spoken to before. You're not sure where they get their money or how they behave on the front or the back end. So that's the only thing I would add to that statement.
No, and I think you do raise a very valid point. And in terms of really making sure that you're comfortable with a private lender, Matt, what are the areas that you would encourage brokers to consider in terms of their due diligence?
Yeah, it's just find out who it is that you're dealing with and where the source of funding comes from. The source of funding is very important, as if it's peer-to-peer investor model, that works fine. But it needs to be a very good operator to make sure that that's a success. You do have liquidity and maturity concerns. So if your client's loan is up for maturity, more often than not, these investors want the money back regardless of where it's invested. That can cause a few issues for your clients. So also be aware of lenders that charge hefty upfront fees or commitment fees. A lot of the time, they get paid before they even look at the transaction in general, and that can lead to a bit of heartache for the client. So.
And I think also on that rate piece, the feedback that I've had from industry is it's important to have an apple for apple comparison and understand the complete picture of the rates, fees, others, exit penalties, and so forth, to make sure that it is you're actually receiving the true story upfront.
Yeah.
Joe, what about you? What are you anticipating for the next financial year for the private lending sector?
Yeah, look, very similar to Matt. I think there's a lot of sitting on hands in terms of rates, what's happening. Some news outlets are saying it's going to go up. Some are saying it's going to go down. Economists from every major bank have a different view. So it's really hard. It's like holding a crystal ball and just hoping. But that's where we can come in, because we can provide that shorter term solution and help clients with their immediate need now and make things happen, rather than sitting there waiting and seeing what the future holds for them. So if there is a transaction or a property they want to acquire, it's easier for us to come in and get it done for them.
Yeah, indeed. Well, we might close with a few questions which have come through. So Matt and Joel, just throw them out and you can wrestle to see who answers them. So we've had a question come in from Vamsi. Do you do land and construction of investment property under SMSF?
The answer would be no. You can't take out a construction loan for SMSF purposes. Furthermore, we don't undertake construction finance in the normal sector, let alone the SMSF. But yeah, the short answer would be no.
Okay, thank you. We've had another question come through. With lease stock or loans in general, what does the broker earn? Is it the brokerage we charge, or do we share application fee or add trail via an increase in rate?
It's a good question. It depends on a number of factors, which is probably too hard to explain on the call. It depends who your aggregator is. We are on a couple of panels, which ties us into certain compliance issues and things like that. So the simple answer would be you get paid your brokerage, which you charge the client through way of mandate. Anything over and above that is a discussion that would have to be made on a case-by-case basis. So again, if I'm not sure where the question came from, but if that person is accredited with Aquamore or with one of our panel aggregators, feel free to reach out to myself and I can have a discussion with you to chat further.
Great, thank you. And actually also on that note, as I mentioned previously, all of the team's details will be included in our follow-up so you've got all of those immediate lines. We've had a question come through from Michael. Will you look at almost completed construction?
I'll let Joe have a look at this one.
I mean, potentially, but we had one scenario very recently that I chatted to Matt about. Yes, but maybe we'd take on the land value only, but we wouldn't be looking at the future completed value. It's just going to be what it is today, possibly the land value only, and maybe dial back the LVR. Depends on what it actually looks like and how close to completion it is.
Yeah, so I guess again, have a chat with your point of contact and see if it stacks up.
Yeah, we've seen ones like that before actually, where they've sunk. It's been a cash build really. They've sunk all their money into it, and they've got to 85% completion. The land itself's unencumbered. You've seen commitment from them that they've ploughed in a lot of their own money, and the build is on course according to the QS report and things like that. So they need a little bit of help on that. As Joe said, we'd probably look at a land value notional component and then figure out if that's enough to get it over the line. And if it is, then probably end up doing the deal. But yeah, it's all case by case.
Thank you. And we'll have one last question from Frank, who said he joined late, but do you do SMSF commercials? So maybe if we can just do a quick recap.
Yeah, Joe.
In short, yes, we do. So we were talking about how much it's a growth sector for us. Matt touched on, businesses taking on their owner occupied commercial property so that they trade from it and it's their investment, they look after it. It's a huge growth sector for us, and I think it's a huge growth sector for the market overall. So we're certainly in there and keen to look at them.
Great. Thank you so much. Well, that wraps us for today. Thank you so much to everyone who's tuned in. And of course, Joe, Matt, as always, fantastic to get your insights.
Thank you.
Thanks, Sasha. Really appreciate it.
See
Thanks
you
for
next
joining.
time.
Yeah.